It's Friday, the 27th of August, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Qantas announces a $2.35 billion loss, but hopes to be flying overseas again by the end of the year. That's our main story. Also coming up in today's podcast, New South Wales records more than 1,000 COVID cases in a single day, but Premier Berejiklian still wants to ease restrictions. Woolworths struggles to keep shelves stocked as COVID bites. And business investment picks up, but the economy may still be heading for a double-dip recession. Then stay listening for my chat to the owner of swimwear group Budgie Smuggler. But first, here's a brief look at markets. Wall Street turned negative overnight after a terrorist attack in Afghanistan killed at least 12 American troops, and ahead of a gathering by the Federal Reserve scheduled for this morning Australian time. The S&P 500 was down 0.4% in early afternoon trading, as was the Dow Jones Industrial Average. The tech-heavy Nasdaq was 0.3% lower. European markets were also lower, with the FTSE down 0.4% and the Stocks Europe down 0.3%. The S&P ASX 200 closed off 0.5% yesterday to 7,491 points. Utilities and materials companies fell, while communication services groups rose. CSL and the big miners dropped, as did the major banks, with the exception of Commonwealth Bank, which ended up 0.7%. Oil prices were lower overnight, while the price of gold was flat, and the Aussie dollar is trading at 72.4 US cents. Qantas reported a $2.35 billion loss for the last financial year, bigger than expected, as the carrier tries to manage its way through the COVID pandemic. Over the past 2 financial years, the group has lost more than $5 billion. Chief Executive Alan Joyce said trading conditions had been diabolical as a result of international border closures for the full year and state border closures for much of it. Mr. Joyce hopes international travel can return again before the end of the year, given the pace of the vaccine rollout, and he wants state premiers to stick to the national reopening plan. Under that, international borders will gradually reopen once 80% of Australians are vaccinated. The airline, in a statement, said the United Kingdom, North America and parts of Asia had high and increasing levels of vaccines, suggesting they were the most likely destinations to open up. But flights to Indonesia, including Bali, the Philippines, Thailand and South Africa, were not likely to resume until well into next year. The result reflected a 60% drop in revenue, and Mr. Joyce said the carrier had $3.8 billion in cash to provide a buffer against further shocks. He expects current border closures in Victoria and New South Wales to remain until December and will cost the business about $1.4 billion. Also yesterday, Flight Centre said it lost more than $500 million last financial year. But Chief Executive Graham Turner said the company had become leaner and more efficient, and things overseas had started to improve. No one has suffered from COVID economically as much as the travel and tourism companies, and few people are continually as optimistic about the future as Qantas's Alan Joyce. He's needed to be. Let's hope the worst is over for the flying kangaroo. In a moment, the rest of the news you need to know this morning. In overseas news, as I mentioned in the market report, a terror attack outside Kabul's international airport overnight has caused at least 60 deaths, including at least 12 American troops. It occurred less than a week before US forces are due to depart Afghanistan. The Taliban, which now controls the country, condemned the bombing and blamed the US for drawing a large crowd to the airport. The Financial Times is reporting that ISIS-K, an Islamic State affiliate, could have been responsible. ISIS-K is not affiliated to the Taliban. Around 100,000 people have now been evacuated from Kabul in recent weeks by the US and its allies. Australia's rescue mission to evacuate people is now coming to an end, with 1,200 more people flown out on Wednesday night. In total, Australian Air Forces have evacuated about 4,000 people. Defence Minister Peter Dutton said the focus would now be on bringing the evacuees from the Middle East, where they were taken, back to Australia. Singapore will force mandatory climate-related disclosures for listed companies under proposals due to kick in next year. The Singapore Exchange is one of the first stock markets globally to do so. And in what is among the world's largest share market wipeout, about $80 billion has been lost from the value of Evergrande Group's electric vehicle unit since April, not helped by an earnings report showing it lost about $740 million for the 6 months to June. Its share price fell 22% on the Hong Kong Exchange yesterday, taking the fall since April 16 to 92%. Locally, New South Wales recorded 1,029 cases of COVID yesterday and 3 deaths. Premier Berejiklian announced a slight easing of restrictions from September 13, including allowing 5 people to gather outdoors unless they come from hotspots. She'll make an announcement on schools returning today. It looks like Ms Berejiklian's strategy is to force people to get vaccinated without quite mandating it. As part of the plan, unvaccinated employees travelling outside their local government area will only be permitted on sites where rapid antigen testing is in place. The antigen tests indicate whether a person is infected within about 15 minutes. Victoria recorded 45 new cases yesterday, and the ACT said it had 9 new cases. Woolworths boss Brad Banducci said the current financial year could be tougher than 2021, as the supermarket fights to keep shelves stocked and doors open. Around 3,300 Woolies staff are in isolation, and around 10,000 staff are likely to be impacted by rules in New South Wales about being vaccinated if you live in a hotspot. Online demand was booming, but the group was losing sales due to out-of-stock lines and a 3-day wait for home delivery, and many staff continually have to contend with working in stores listed as exposure sites. Mr Banducci's comments came after he announced a 20% jump in net profit to $1.5 billion for the last financial year. Woolies will undertake a share buyback worth $2 billion, using the proceeds of the sale of its liquor and gaming group, which recently listed as Endeavour Group. Woolworths' share price ended up slightly yesterday. The Endeavour Group also reported and said underlying earnings were up on 12 months ago when it was part of Woolworths. Earnings from alcohol and hotels jumped sharply, partly because many venues were closed the previous year. But CEO Steve Donoghue said the outlook was uncertain because of the current lockdowns. Its share price fell more than 2%. Capital spending bounced back during the June quarter. Private sector capital expenditure rose 4.4%, much higher than forecast. Year on year, it was up 11.5%. It looks like the reopening of the economy earlier in the year led to plenty of business investment, a key ingredient in economic growth. The Bureau of Statistics data also shows that plans for more spending were well above last year. The figure feeds into economic growth data due out next week. We already know that the economy will contract during the current quarter because of lockdowns. If it contracted during the June quarter, then Australia will experience, technically at least, a double-dip recession. In other economic news, NAB figures show that online retail sales jumped by more than 6% last month, led by higher grocery and liquor sales, clearly a result of lockdowns. The federal government wants to overhaul the national electricity market, whereby power producers will be paid for having generating capacity available when needed, rather than get paid for the total electricity they produce. Critics said it's effectively a coal keeper measure because fossil fuel energy sources are more on demand than renewables. They also argue that energy users may be hit with higher costs to get guaranteed supply reliability. The Future Fund, which every one of us own, has grown to $196.8 billion after delivering a 22% return for the last financial year. The sovereign fund's performance was its best since it was set up back in 2006 in the Howard Costello years. The fund's mandate is to deliver returns 4 to 5% above inflation, so that's about 6 to 7%. Over the past decade, it's delivered an annual return of around 10%. Former Telstra Chief Executive Ziggy Switowski will replace Helen Coonan as Chair of Crown Resorts. Now, that is a tough gig. Mr. Switowski, who has one of the great names to say out loud, is a seasoned company director and chair of the NBN and Melbourne's RMIT University. An activist group is suing Santos for claiming in its annual report that it produces clean energy. The Australasian Centre for Corporate Responsibility said the oil and gas producer was engaging in misleading or deceptive conduct. It also challenged whether Santos had a clear and credible roadmap to reach net zero emissions, as it claims. According to the Financial Review, the court case is the first in the world to challenge a company's net zero emissions target for being misleading. Vitamins Group Blackmores reported a big jump in sales to China, triggering a 15% rise in its share price. Sales to the world's second largest economy was a highlight of the group's 5% rise in profit last financial year. At the other end of the spectrum, the share price of A2 Milk tumbled 12% yesterday, taking its 12-month loss to 67%, after it confirmed that sales of its dairy products to China had slumped. The company said it was undertaking a review of its strategy, no surprise there, given its Daigou or reseller and e-commerce channels to China had fallen apart. Australia's largest coal producer, Whitehaven Coal, expects coal prices to remain high, and the beleaguered company should be able to keep paying down debt and return to profit this financial year. A massive impairment charge alongside low coal prices, geological problems at its Narrabri mine, and disruptions to transport infrastructure triggered a net loss of $543 million last financial year. But a year ago, Whitehaven told its lenders it would stop dividends in exchange for covenant relief. Yesterday, it said it could be debt-free in 12 months' time. Its share price jumped 5% yesterday. Department store David Jones said profit was up sharply last financial year, but 70% of stores were now closed due to lockdowns in Victoria and New South Wales. The group's earnings were up almost 300%. Ramsay Healthcare boss Craig McNally said the ban on elective surgery in Sydney's private hospitals was unnecessary, notwithstanding the COVID crisis in the city. Mr McNally said earnings would be hit. He was speaking after announcing a near 60% jump in net profit last financial year. Ramsay's share price rose almost 2%. Salmon producer Huon Aquaculture is in the middle of a takeover tussle between Brazilian meat processor JBS and Fortescue Metals founder Andrew Forrest. JBS has offered $540 million, which Mr Forrest said he'd match because he wants to end all fish farming in Tasmania's Macquarie Harbour. Huon has rejected Mr Forrest's offer. In any case, the group lost $128 million last financial year. Why? Because salmon prices have tumbled and the cost of getting salmon to markets has soared. And artificial intelligence data group Appen reported a halving of profits as its big customers, including Facebook, Microsoft and Google, sorted through data privacy changes. Confusion over the changes meant that the big tech companies diverted money away from user tracking technology, hurting Appen. Its share price fell more than 21% yesterday. Up next is the Daily Interview, and today's interview would have to be one of the more unusual ones I've done. You're probably familiar with the Aussie swimwear brand Budgie Smuggler. I'm talking to Adam Linforth, the man whose business card actually reads Chief Smuggler. I'm not kidding. It's a terrific chat about how a group of mates managed to turn a backyard joke into a thriving business that's now selling a pair of swimmers every couple of minutes. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Friday, the 27th of August, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.